Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, a US Fed rate hike next week is now much more likely. This weekend, we get the February US non-farm payroll report, and markets expect payrolls to grow a little less than in January's 227,000, with expectations of a 190,000 increase. But that may need to be revised now because a precursor ADP report has come in suggesting almost 300,000 rise. That is a surprise and is moving markets today. Wall Street is higher, the US Treasury 10-year yield is up strongly, and the US dollar has risen sharply. And because unemployment is relatively low, the output of those extra workers is constraining US productivity. It increased a modest 1% in 2016 as output increased 2.2% and hours worked increased 1.2%. American wholesale trade was up 8.4% in January from the same month a year ago, and it came as inventories rose just 2.2% over the same period. In China, they've reported their first trade deficit in February since 2014. Imports surged and a slowdown during the Lunar New Year holidays hit output. Higher commodity prices and domestic demand were behind pushing February's imports up 38% on a year earlier. But exports unexpectedly fell 1.3%, giving a trade deficit of $13 billion for the month. This has surprised markets as a $38 billion surplus was expected. Still, China is managing to hold back capital flight. Foreign exchange reserves inched up to just on $3 trillion in February after it had slipped below that level in January. However, some companies in China are not happy with the heavy-handed way they are being blocked from making overseas deals. In New York, the US Treasury 10-year yield is rising sharply and is now up to 2.55%. Oil prices are down sharply today, just over $51 for the US benchmark, while the Brent benchmark is just over $54 a barrel. And the gold price is also lower, down by $10 at $1,208 an ounce. The New Zealand dollar is falling against the stronger US dollar and is now at 69.1 US cents. On the cross rates, the Kiwi dollar is down to 91.7 Aussie cents, and against the euro is at 65.6 euro cents. The TWI is now down to 75, and that is a new 5-month low. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.